It's Mark Yegge here, wealth architect and lifestyle investor. Let's take your life to the next level. Welcome to the Wealth Architect Podcast. Hey, everybody, it's Mark Yegge. Welcome to another edition of the weekly Wealth Architect Podcast. Glad you're here. We have a great guest today. We have a retired senior VP and financial advisor with over 40 years of experience in investments. And we're going to be talking about a few things today and delving into some subjects that I know you're going to be interested in. One is, how can small everyday savings turn into long-term wealth? Why is the stock market still the best vehicle, and how can beginners navigate it safely? And what is the get rich quick slow approach, and why does it outperform quick fix strategies? And maybe we'll get into this one. How can investors find ethical financial advisors and avoid those hidden fees? We're going to be talking with our guest today. His name is Frank Buchholz. So please welcome Frank. Hey, Frank, how are you today?
Good, Mark. Thank you for having me on. I appreciate it. Thank you.
Good to have you here. And you know, you're talking about one of my favorite topics, and that is the stock market. And tell us a little bit about how you came to where you are today in the stock market and deciding that's where we should have a lot of our money.
Well, I appreciate that. Thank you. So bottom line is the fact that in my IRA account, I grew my IRA account to over $8.5 million while I was working. And to me, that's significant because a lot of people get wealth, they have a big net worth in their personal account, but they may have inherited it. The IRA account, of course, is simply you contributing money to that IRA because you're limited in terms of how much you can contribute. So with my IRA account, I started at Smith Barney back in 1982. I started funding my 401k in 1986, and I maxed out the contribution every year. And thank you very much for the man up above. I put all that money in the stock market all those years. So literally 40 years of contributions, which is about $770,000, I figure, more or less, $8.5 million later. So that, I think, shows you the power of growing your money and having it on a tax-deferred basis. And if there's one thing that investors want to do, it's to either have a Roth or a contributory IRA along with a 401k. Those are the two best investment vehicles I find for saving money for the long term and letting the money grow and having a nice retirement when they finally get there and having no money worries when they in fact retire.
Now, what kind of strategies did you use over the 40 years to get to $8.5 million or $8 million, whatever you said?
Well, the bottom line, a couple of things, is the fact that I firmly believe in investing in America. I also believe in having a balance between large cap, big companies, if you will, and of course, those are the value companies, and also growth companies as well. So it kind of had a balance between large cap growth and large cap value. The other thing that I did, of course, was that I never panicked. And there were some times, of course, throughout the career, which are pretty onerous, if you will, particularly the tech bubble bursting in 2000, the Great Recession of 2008 and 9, where if I had sold and tried to get back in, I would have shot myself in the foot. So while I was concerned, and my 401k became a 1.8k, et cetera, I hung in there and kept contributing. And I think that takes a lot of discipline because I was panic stricken. I was losing sleep at night. My clients weren't happy. I wasn't happy, but I hung in there, and I was rewarded handsomely for hanging in there. Because the market from 2008 and 9 to where it is today exploded. So that helped me immeasurably. So bottom line, of course, is the strategy of investing in stocks and contributing continually and hanging in there, not running for the door.
You know, the funny thing is, you know, we've all heard, or maybe we haven't. If you haven't heard, you know, if you invest in the stock market and stay in, you're going to catch those big days that if you're out, those are the big performing days that are going to add to that portfolio that you have. And we don't know which way the stock market is going to go. It's going to go up, down, sideways. We have no idea. We think we do because we watch all these brilliant people on TV tell us what they think, but we know they're getting paid from something else, usually advertising. And usually they're not right. I mean, you can look at a lot of the people that are out there and they're not right. So the bottom line is, if you do stay in the market, now, if you have a plan, if you have a strategy, if you have a goal, that does help you kind of stay in the market. And a lot of people just don't have a plan. They just kind of get in because their brother-in-law tells them to buy this stock. Then they lose a bunch of money and then they're out. And so you need to be able to sit down with a plan, don't you think?
Yeah, no question. Of course, also too, to make sure you're well diversified. If you have your money in one stock, or you're shooting yourself in the foot. But with an IRA plan and a 401k, what have you, generally speaking, you're offered mutual funds, potentially exchange traded funds, etc. So you do have, a fairly good menu, if you will, in terms of what you can invest in. In our 401k at the bank, we never could buy individual stocks, except for our own, which is Bank of America. So bottom line is the fact that I firmly believe in having managed accounts of one flavor or another. That, of course, will prevent you from shooting yourself in the foot.
And why is the stock market the best investment vehicle? Why not Bitcoin or gold or something else that seems to be the story of the day?
Yeah, the flavor of the day, if you will. So I firmly, if you look at historical returns over time, going back literally to the Depression, the stock market's outperformed all of the major asset classes, be it real estate, bonds, gold, what have you. And I'm not necessarily sold on Bitcoin. I think it's kind of an artificial currency, and it's, the thing that concerns me about Bitcoin is you can continually make more of it. And if you buy stock, for example, in Apple, unless they do another stock offering, which they probably won't, there's a limited supply of Apple out there. Whereas Bitcoin, of course, can continue to go on and on and on in terms of production, in terms of more quantity. So there's a kind of, to me, it's also supply demand imbalance at times, potentially. So I'm not necessarily a fan of that. Plus, what is it? It's an artificial currency, and I'm not sure that that's really where you want to be. So given the fact of the historical returns of the stock market being the best, I know it's a little rough at times. Picture yourself on an airplane. If you get turbulence in the air, you can't get off and jump out of the plane. Obviously, you have to ride the plane to the next destination. That's the stock market. You got to kind of be disciplined to hang in there, go through the good times and the bad times.
Well, it certainly has worked for you. I disagree with you on some of the Bitcoin stuff, but there is a limited supply on that one. There's 21 million that's ever going to be made on that. The other ones all have unlimited supply, so I would tend to agree with you on that. But yeah, the stock market has outperformed for years and years and years. I look at it a little, I used to be a financial advisor, and I look at it a little different now. I look at the S&P as basically the rate of inflation, the real rate of inflation that we've had. And so if you're not keeping up with inflation, you're going backwards. And so if you're in a CD, let's look at the landscape today. CDs are paying what, 4.7%.
Right.
And the stock market is going up, double digits now. I mean, it used to be going up 8 or 9%. Now it's eked its way up into 11 and 12. And that to me is because we have much higher inflation. You've heard about all the stories about eggs and all that stuff lately, but it's housing prices have almost doubled in the last 10 years.
Oh, it's unbelievable.
It is. And so you got to stay ahead of inflation. That's your baseline. And then you've got to still be ahead of that in order to have some growth. So it sounds like you've tapped into some of that at the right times and over time, which is exactly how it happens, right?
Absolutely. And of course, also too, you need to have what I call a buffer, if you will. Buffer meaning you have some money set aside so you can let the other pot of money grow for you. So you're not necessarily tapping into the stock market money to pay for bills or emergencies or whatever. So you can let that money grow and grow and grow and grow over time.
I don't know if I heard a statement once or it's mine. I don't know. I won't take credit for it. Doesn't matter. But there's two ways to get rich. There's the fast way and the slow way. And the fast way is the slow way.
Yeah. So, and I've never believed in get rich quick, if you will, and all this hot tip and everything. In 40 years of experience, I never had the quote unquote hot tip. And of course, if there was a quote unquote hot tip and I acted on it, let's say I bought a bunch of calls or whatever, that would show me I'm out of my normal realm of investing. And of course, the SEC watches that stuff like a hawk, and guess what? I could have had a real calamity in my hands. So I never got a hot tip, never acted on one, thank God.
Yeah, every time I've heard about some hot tip, it's always gone the other way. And it's by the time I heard about it, it's too late.
Yeah, no question.
That's the way they go. So but you believe in getting rich the slow way. What does that mean? How do you define that?
Well, basically you need to start contributing when you're young, and the sooner you start contributing, the better off you're going to be. And the concept of living for today and forgetting about tomorrow, I think is kind of shall we say short-sighted, to put it mildly. So bottom line is the fact that if you can start contributing today, be it a Roth IRA, contributory IRA, 401k, whatever, even your own personal savings account, whatever, start building some money and put that money in the stock market and let it grow over time. My perfect example in my book, of course, is the Starbucks coffee plan, whereby you can take $10 a day and not buy two cups of Starbucks and put that in the stock market, even SPY, the exchange traded fund that mirrors the S&P 500. Over 35 years, you'd have typically $1 million plus.
Right.
And your contribution is like $110,000. So that to me is very, very worthwhile. And of course, imagine today, half Americans retire with no money saved for retirement. That to me is an absolute tragedy. And the
It's a
goal of my
shame.
book, of course, is to try and change that mindset to not necessarily live for today, but also look at tomorrow.
Yeah, absolutely. Now, what do you think? As you talked here, it comes to my mind that you're not talking about bonds at all. You didn't mention bonds once. You talked about, stock market and spreading it around on large caps, small caps, those kinds of things. Why not bonds? Or is bonds something we just haven't talked about yet?
Well, that's a good question. I think the bottom line, of course, is it in my business, my practice, if you will, I did have a lot of clients buying bonds. And the reason for that is because their objective was to preserve their money, not grow their money. In my own case, when we got married, 45 years ago, we were broke, BROKE, and then some. So my thinking was to grow the money, not preserve, because I didn't have anything to preserve. So
Right.
a lot of my clients, they got money from inheritance or build their business or whatever. When you sell a business for $100 million, do you really need to grow the money at that point? And of course, the fluctuation, of course, for a lot of clients, they didn't want to deal with the fluctuation. Even though there's fluctuation in bonds, it's always going to be less than the stock market. So it kind of
Well,
depends upon the person's objectives.
it was a bit of a leading question because if you've looked at actual bond performance over the last 3 years, bonds have been cut in half. And these are supposed to be
Absolutely.
the safest investments you could put your money in, but it's cut in half while you're making 3 or 4%. So it's not, everything is not as it appears, right? Risk is kind of not as we've been taught. So you're right. You need to have some growth in there. You need to have some diversification. You need to have you need to have a strategy and a plan. And most people don't, right? So
That's correct.
if
That's
nothing
correct.
else, at least have a strategy and a plan, even if it's just I'm going to buy something every Tuesday as long as I'm eating crackers. At least that's a plan. Most people don't even
Absolutely.
have that,
Yeah,
right?
absolutely. They don't have anything at all. And the funny thing about it is people don't want to think about their money. And I always think about it after your health and your family, money should be number three, and that's not a priority for most people at all. It just
And I don't know
isn't.
about you, but I use it every day.
Oh, absolutely. No
But
question.
nobody ever taught me about it, right? In school, like I went to all
Yeah,
these schools and I know more about Copernicus and Romeo and Juliet and the Pythagorean theorem than I know
yeah,
about how to handle money. And it's a shame
yeah,
because
absolutely.
we could make some better decisions for ourselves. Whether the decisions are good or bad, at least we have the power to make them. Today, we give up our
Absolutely.
power to other people. And I think people like you and maybe me are out there trying to educate people about how to make better decisions, right?
Yeah. That to me should be a course mandatory in high school and of course mandatory in college.
Absolutely. I mean,
Very
business,
least.
entrepreneurship, buying a house, buying a stock, how to invest, what it's all about, compounding money, all these things that we know, we take for granted. Most people don't know them. It's a
Yeah,
real
exactly.
shame.
I remember talking to a college educated person, and the person said to me, "What's a mortgage?" And I thought, how could you get through 4 years of college, have a degree, and not know what a mortgage is? I thought, holy Toledo. So
Most people can't even
there's a
don't even know. Yeah, don't even know what
it's
an amortization schedule is,
no, they
which
have no clue what that means.
no clue. I
No,
mean,
no
it
clue.
is an interesting concept. Hey, it's Mark Yegge here to tell you about our cash flow machine trading program that's designed to teach you how to make safe, reliable income. Now, we shoot for 2 to 4% a month of income and growth in your portfolio. And we have courses to teach you how to do this yourself or inside a mastermind community. And the best part of that is it only takes about 20 minutes a week to implement. Now, while 2 to 4% a month doesn't sound like much, I show you exactly how we took my IRA from $111,000 to over $500,000 in just 19 months without huge risk. I'm not telling you this to brag, just to show you that you can do this too. So to learn more about this program, go to cashflowmachine.io. That's cashflowmachine.io, and you can learn more. So you're a veteran in the financial services business. I was too. How do we steer people to be able to find ethical, good, quality financial advisors if they should choose to look? They're working 90 hours a week, like a gentleman I was speaking with this morning. He doesn't have the time to sit in front of a computer and invest. I don't think that you're talking about that either. But how does he find somebody that can be a partner and help guide him through his financial journey?
Absolutely. So, it's funny, in my book, I point out the fact that I don't really care for most financial advisors. A lot of them are
Yeah.
arrogant, and they talk down to you and try and snow you with all their very, very fancy terms, if you will. First thing I would suggest, of course, is talking to the professional people you associate with, be it your attorney, your CPA, what have you. There may be a potential referral there source. Also, if you have any affluent friends, they may be a good source, if you will, also. And then, of course, lastly, another one to, of course, check is if you call the various branch managers of, let's say, a Merrill Lynch or Morgan Stanley, JP Morgan, what have you, and you tell the manager what you're looking for and where you're at with your life in terms of your finances, that manager may be able to refer you to one of their top performing financial advisors. Once you actually meet the financial advisors, though, watch out for the arrogance and the condescending, if you will, because that seems to be kind of a trademark for a lot of advisors. And also make sure they have the patience to answer your questions. In my case, I was always applauded for my ability to explain the concept of finance in an easy to understand manner. And people like that about me. Plus, I always thought to myself, well, I was never an expert way back when. Of course, now it's way, way back when. But bottom line is the fact that I was able to have the patience and kind of put myself in their shoes. I'd kind of lead them along and pull them through the process, if you will. That's what you want to look for. Somebody has patience and also shows care and concern about your financial situation.
Yeah, good advice. All right, let's start to wind down here. What would you say are maybe 2 or 3 tips that you can leave the audience with today on what they can do to either get started or accelerate their financial journey and financial success? 2 or 3 tips.
That's a good question. I think my first chapter, I talk about developing a proper mindset. And the proper mindset, of course, is to start thinking about your do-re-mi. Start thinking about your money. Where are you going to be, 10 years, 20 years, 30 years from now? So you need to kind of wrap your arms around that. And I also illustrated one of my favorite clients, his name was Leo Rena. And when I met him, his account value was substantial. And he lived to be 102 years old. But wow. he invested in the stock market continuously. And he always say to me, when the stock market goes down, get the amateurs out of my way, I'm coming through. He would buy the market when it was down. So the first thing people want to do, of course, is get your mind set on being financially savvy, if you will. And of course, that's part of chapter number 1, get your mindset. And then secondly, of course, is understand the concepts of, look at your long-term terms. And I also provide a website whereby you can plug in numbers and you can actually see if you invested over the last 10 years, 20 years, 30 years, 40 years, whatever, and the amount of money you invest, well, how much your money would have grown to historically. And of course, I always point out that history is not a guarantee of the future, but when you look at 40-year returns, probably they're going to be somewhat similar over the next 40 years. As long as we have a country and and so on and so forth, which I firmly believe we will, you can actually project what you would have in terms of your nest egg. That to me is very motivational because you can say, oh my, look at that, I'd have $1 million or $2 million or whatever, Very, very powerful motivation to get your mindset properly set.
Yeah, good. All right, so it sounds like a lot of planning, a little bit of motivation, a lot of mindset stuff. I always say to at least my clients and prospects and people that are looking to learn, mindset is 90% of this game. If you don't have a good mindset, you're in trouble. So I think
number 1.
We're on the same page. So you've mentioned a couple of times that you've written a book. Where can people go to find out more about you, Frank, or maybe get educated and get around you?
So if I can show us on the screen here. It's the Investor's Golden Playbook.
There it is, the Investor's Golden Book. Nice.
The Golden Playbook, yeah, Investor's Golden Playbook. It's available on Amazon, Barnes & Noble, and other websites, if you will. And if they go to the Amazon, they can actually read a sample of the book. They can see the table of contents, introduction, chapter number 1, and part of chapter 2. So you get kind of a flavor for the book, where it's going, and so you get some flavor there. Barnes & Noble and all the websites, they can buy it. You can actually go to Barnes & Noble. You can actually order it through Barnes & Noble. It's not on their shelves yet. My goal, of course, is to get there sooner or later. But we take baby steps when you write a book and get it going, if you will.
Absolutely. Well, I certainly I think everybody, if you haven't started on your financial journey, or if you want to be motivated to do it, somebody like Frank can get you on the right steps. And he's got that golden playbook, which is going to get you on the right path and hopefully make you start thinking about this and wanting to get educated. Because after all, it's the money that we use every day that we're going to be needing when we're 65, 70, 85, 90, 102 years old, like his example was. So go get that book and at least do something. You got to make one decision, take one action step today. Maybe this is what you needed. Those of you who are listening. So Frank, thank you so much for your time.
Thank you very much. I appreciate it, Mark. Yep. Tell investors, tell your listeners, Investors Golden Playbook. It will change their lives. That's my goal. That's my
I
goal,
think
to
so
change
too.
people's
Yeah, we
lives.
just went. Yeah, let's get some lives changed, Frank. We're on the same page. Thank you for being here. And
Thank
those
you,
of you who are
Mark.
listening and watching, remember what I always say: never give up your power in your health, your wealth, or your time. Have a great day,
That's
everybody,
right.
and I'll see you next time. Take care.
Thank you much. Take care.
Thank you. You've been listening to the Wealth Architect Podcast with Mark Yegge. Follow us on iTunes, Spotify, or wherever you get your podcasts. Like and subscribe on YouTube. Share and tell your friends. See you soon.